globally there are a lot of quant funds emerging, right? And in India also now we have few quant funds coming in. So do you think that Indian market, Indian investors are ready for the quant strategy that you're launching in currently?
Sure. See, in our view, quant is about man plus machine is better than man or machine. There are certain strengths of human fund managers and there are certain weakness of human fund managers and vice versa. So if you look at from an investment point of view, the strength of the human fund manager, especially when it comes to India, is that generally money managers in India don't like to partner with bad companies. Every year, you know, out of 5,000 companies, there are maybe 5-10% of companies which go down 70, 80, 90% and never recover. You generally don't see that in the portfolios of various money managers. So that really is the strength, that we have the ability to distinguish between a good company and a bad company. The weakness of the human fund manager is, like most human beings, we tend to be emotional. And that emotion typically comes more when it comes to selling a stock, the exit strategy of a stock. Because at the time of selling, generally there's a regret, either we are selling too early or a regret that we are selling too late. And in this entire process, decision making gets a bit suboptimal. And therefore, we think that there is a room for a machine intervention. And if I look at from the machine point of view, the real strength of the machine, of course, it's high number crunching that it can do it very quickly. But the real strength is it is emotionless. There are very clear buy rules, clear sell rules, clear hold rules. Without any emotion, one can execute it, right? The negative of the machine is it is garbage in, garbage out. It really has no diligence to say which is a manipulated company and which is a good company. So in some sense, we think that there are positives of having a human mind behind a quant strategy, as well as there are positives of having a machine. And therefore, if we blend both of them, we think that we can get slightly more repeatable outcomes that investors can enjoy while participating in the broader Indian equity story.
Okay. We also observed on the presentation that the benchmark is going to be Nifty 200. Any specific reason behind having that as a benchmark?
Sure. So let me now kind of give you as to how we create it, and therefore it gives you a sense as to from where are we picking up and why therefore our benchmark is NSE 200 total returns. See, the starting point is in any fund house, there are multiple mandates, there are multiple fund managers, multiple styles, okay, and multiple number of stocks at a given point of time that a fund house will end up owning. Maybe 250, 300, 350, 400 stocks they may end up owning across all of their schemes. But just like in every profession, there is a 80-20 rule. Like in sales, they say 20% of clients give you 80% of business.
Yes.
Similarly, when it comes to the asset management or the Indian mutual fund industry, roughly the top 75 positions in a fund house account for 80% of AUM. Okay, this is where generally funds put in their highest conviction, the most risk reward kind of positions, because at the end of the day, every fund house wants to add value to their unit holders by trying to create alpha, right? So this is where their highest bets are in terms of conviction. Secondly, when it comes to the score 75, the chance of getting a terrible company in terms of its outcome tends to be even more limited, because it generally comes through multiple fund managers looking at, multiple analysts recommending it. You've got the CIOs having a look at it, you've got the risk management committee, the investment committee. So therefore the chance of you to get a terrible outcome are very less. Thirdly, within this set of companies, there is a large liquidity already bought in by mutual fund. So therefore, to execute in and out is not very difficult from that perspective. So our starting point is we take the top 75 of each of the fund houses, which is 75 of Birla, 75 of Axis, 75 of Kotak, HDFC, etc., etc. Okay. And this pool of stocks, there will be many stocks which are common, there will be some stocks which are unique, right? This pool of stocks, if I were to look at how many stocks are there today, that's roughly about 240 stocks. You'll have about 85, 90 large cap names, you'll have about 125, 130 mid cap names, and maybe 20, 30 small cap names. From this list, we are basically excluding the small caps, and therefore this is going to be only from large and mid cap. Then we run into some quality filters, the momentum filters, which is basically looking at the form of each of these stocks within these set of say 200 to 220 names. And then we have a weighing strategy wherein we are looking at, after a sell side revision in terms of forward looking estimates, we have a weighing strategy wherein we are weighing it on low volatility. That is, lower the volatility of a stock, which means more consistent the stock has been over the past 3 years. We want to give it a higher weight in the portfolio, and higher the volatility or lesser the consistency, even though the near term form is good, we want to give it lower weight. And this is how we create a portfolio at any given point of time. In some sense, okay, this is similar to creating a team for, say, the World Cup. Okay, now one option is I can have a signal which looks at all the 5,000 Ranji Trophy players and arrive at a team of whatever 15-20 players. Okay, that is prone to, at some level, the selector's bias as to whom to select, how to select, etc. Right. The other option is I look at only the IPL team players. IPL team players themselves want to win. They are also scanning all of these players and creating a thing. Within an IPL team, maybe there are 25-30 players. Some players are played in almost all matches, which is what we are looking at. When we say top 75, we are saying that let us look at players that play most of the matches, right? From there, we are looking at the form in IPL. If the form in IPL is good, it is great. If it is not there, sorry, you will have to go back to Ranji Trophy to perform. Then we get to the selection committee, who may say that, okay, maybe the form is good, but the technical competence is still not yet there, and therefore we want to avoid it. Now, in terms of, say, weighing, so you've got, say, Rohit Sharma and Sanju Samson, both good players with reasonable form in this IPL who are there. Okay, in terms of whom to weigh more, we look at the long-term track record of Rohit Sharma, who is slightly more consistent than Sanju Samson, and therefore Rohit Sharma should play more balls than Sanju Samson, so he gives the opener compared to Sanju Samson. So this is the broad process that we have in terms of selecting, and because we are primarily looking at only a large and mid, the benchmark is at appropriately NSE 200, which is primarily large and mid as well.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.